my name is Anthony and welcome back to Metals and Momentum. Thanks so much for being here. In this video, I have a number of things that I want to talk about. I have been getting a lot of questions about gold and how to, begin that portfolio and how to actually allocate money to some investments. And one of the core investments that I think is super important over the next maybe, let's call it like 10 years, I think is going to be gold. Of course, I'm not going to just buy gold right this second and then hold for the next 10 years without, making some sort of adjustments to the portfolio. And that's where the SUBSTACK comes into play. I write a bi-weekly report and I also send out trade notifications for anybody who is looking to allocate money to investments in terms of like gold, silver, swing trading. Our swing trade portfolio has done incredible over the last it's been about 5 weeks or something like that. The amount of money that we have made swing trading versus what the S&P 500 has done over the last 6 months has been ridiculous. And you can see all that in the description. I'm not going to go over and give you the full pitch there. Join me on Substack. It's down in the description there. So I want to talk about first allocating a portfolio and allocating money to an investment in terms of physical gold, because that's the question that I keep getting asked. And if I was starting from scratch, here's what I would do with my money and how I would actually think about beginning to allocate money to your portfolio. So I created this it's an online webinar. We're actually having another online webinar I'm going to pull this calendar up. So it's going to be May 2nd. And you can actually join me live. And I'm actually going to go through this entire presentation. For the sake of this video, I'm just going to be using this one slide, maybe one other slide, to kind of go over how I might think about allocating money from scratch, right? So let's say you have $100,000 and this is what I would do with my money. I'm not a financial advisor, but I've absolutely destroyed the S&P 500 over the last little while. So, I think I got a pretty good handle on things and I'm being asked by family members what to do, right? So this video is mostly for them, but this is how I would do it, okay? So this portfolio, very simple and very easy to understand. I would take my total amount of money, and in this example, I'm just going to use $100,000. Let's say we have $100,000 to allocate to investments as a whole. How would you go about doing that from scratch? Well, the first thing that I would think about, and the easiest way to think about this is the first investment that I would make is actually over in physical metal. I'm going to hop over to my Substack here, and I'm going to probably actually include this link in the description as well. And I wrote a full article about how to buy physical gold and silver. I'll put this in the description. And it's a local dealer. I don't work with them. I don't work with them at all. I don't get paid from anybody to make these recommendations or anything like that. This is literally how I buy gold and silver. So there are a couple websites you could actually get gold and silver delivered to your doorstep. For example, Silver Gold Bull is one way that I would do it. You could begin to allocate money to physical gold or silver today. Whereas if you needed to set up a stock account or anything like that, it's going to take a few days and you're going to have to kind of, work through that process of opening up a brokerage. You're going to have to learn how to, buy into a stock. What is a ticker? How many shares do you even purchase? That whole process takes a little bit of time. Whereas if I'm recording this on a Saturday, I could essentially have gold and silver in my hands by, let's call it Wednesday next week or something like that. So it is really the starting point that I always talk about with people, is because one, it's easy, and two, it's also been one of the best performing assets since the year 2000. So we're in 2026 right now, and pretty much no matter where you slice it, everybody says oh, well, you're cherry picking the data. Okay, so if you don't want to choose the year 2000, let's take the last like 15 years. Well, gold has actually I think actually gold and silver now have actually outperformed the S&P 500. Maybe not silver because of like the massive peak that it had, but if you just look at gold as a whole, or precious metals as a whole, you could actually notice that gold over the last 26 years, over the last 15 years, over the last 10 years, no matter which way you pull it from, this asset has outperformed the S&P 500 by a good margin, which is actually pretty crazy to think about. Now, we're in this pullback period. I want to go over a long-term outlook, a medium-term outlook, and then a very short-term outlook. But we'll go over that in a little bit. So I think gold is one of the most important things that you could do for your portfolio. I would just slice it in quarters. So I would allocate 25% of my total net worth, and I would put that into physical gold. Maybe, trim that down a little bit, and then you go like 5% into silver or something like that. But I wouldn't allocate money. Like, I wouldn't take my entire portfolio and just be like, well, this portfolio allocation that I have on the screen here, it says like I got to put 25% in physical gold. I wouldn't just immediately go out and purchase $25,000 worth of gold if I had a $100,000 portfolio. I would do it just over a little bit of time. I think people get stuck in these like portfolio allocations, and then they just like immediately like jump in. And this goes for gold, but it also goes for stocks as well. The stock portfolio, like I wouldn't just immediately go and buy $25,000 worth of stock right on the day that I've decided to allocate capital. And I think it'll be really helpful once we go over the gold chart, and you can begin to understand that, we're in this little bit of a downtrend right now in gold. So it doesn't make sense to just take 25%, $25,000, and just immediately allocate it right to gold. But if I had $0 exposure to gold, then what I would start to do is I would just start to move a little bit in here, a little bit in there. Right now, I think let's actually look in Canadian dollars. Gold's at $6,400, give or take right now. And maybe you just buy like an ounce now, wait a bit, an ounce later, wait a bit, an ounce later on, or however you want to do it. Like you can go in and buy like quarter ounces. You can go in and buy, half ounce. However you want to allocate that money to gold and silver is really up to you. But that I just wouldn't go like gung ho, like right into it right this second, because I'm actually monitoring the chart right now and seeing that it's just not like we are in a clear downtrend. So don't go crazy. Don't just like blow your entire like gold position into precious metals right now, because we're going to look at the chart in like a long-term perspective, and I'll show you a couple things on the chart here. So let's just go back to the portfolio allocation, because I think people will have questions as to what else we should do with the money that we have decided that we want to allocate things to. And one of the things that I talk about on this online webinar is collectibles. Collectibles is such an underrated asset class. I think this is a pretty amazing asset class, and it's like usually the last thing that people will generally sell in a bear market. Like, for example, I have watches and like jewelry in my collectible kind of area of my portfolio. And if I'm going to allocate 25% of that to collectibles, I would be happy with this, because like this is kind of like the fun portion of your portfolio, whereas like everything else that is going to be put into your investment portfolio is very, very boring, right? Like you got gold over here, and you want to save a little bit of cash just for like in case there's like a bear market or something like that. Then that's all boring and it's just sitting there doing nothing. Whereas like you could actually have a lot of fun using collectibles as an asset class. And this is like the best part of investing, right? Like you want to be having fun with your portfolio. It's not just about owning gold. It's not just about owning stocks. Stocks, gold, cash, it's all boring, right? Whereas like there needs to be some kind of fun in your portfolio. And I think collectibles is a perfect place for that because like think about you can see in my notes here, I actually made this slide for my dad. And I was like I was joking with, people on the online webinar that I was hosting. And I was saying like, if I was my dad and I didn't know what to do with, my money, I don't want to risk it all in stocks. I don't want to risk it all in gold. And, I don't want to have it sit all in cash. Well, I would think about what are the limited supply things that you could buy that you would actually enjoy researching and also finding and also purchasing and also hanging on to. This is such a great asset class and it's underrated. That's why I think a lot of people kind of skip over this portion, but I would just think about it in this like quarter type of way, right? Like, so 25% in gold and silver, maybe you split that like 20% gold, 5% silver, something like that. And then you got to find some other things to do with the money, right? So like, it's not just cash and bonds. Of course, like I think it's smart to have a little bit of cash right now. The S&P 500 is being super volatile. Stocks are all over the place. They're up, they're down. Is the straits open? Is the straits closed? Who the heck knows? The markets are moving on Donald Trump tweets. I don't think this is a point in time where we need to allocate every single dollar of your 25% into stocks, right? Like you could inch into it and take advantage of the opportunities that are actually out there, right? So for example, in my newsletter, we track a number of different things and I'm going in and I'm going out and I can use a portion of my stock portfolio, so $25,000 and take advantage of just the opportunities that are actually being presented to themselves. So you don't feel like you need to allocate $25,000 right out the gate and just like dump it all in. We could inch into it. So when I'm thinking about that gold position and silver position, 25% of my portfolio is going to be in gold and silver. Now let's actually take a look at the charts and see when we might actually want to allocate that. I have participated in the recent run up in gold and silver, and this run right here was just crazy. Like this is the gold price at the beginning of 2025, which is unbelievable to think about. And even after like a somewhat decent decline, last year, gold ran 81%, even after a decent decline. From like the peak here, we're talking over 100% gain in gold in a single year. That is a massive, massive move. And how assets tend to work is once you have these like parabolic moves, you're not just going to like continue on. Like we're not going 100% every single year. It would actually make sense for gold to just trade downward. And this would be exciting for somebody who is beginning to allocate money to gold. So don't think about it in a way that, it's like, oh my gosh, gold could go down like 25% or something like that. I personally don't even really think about the price of gold. I just go, does my portfolio need it? And if so, and if the chart looks good, then I'll just buy it. Like that's how I think about physical gold. I don't trade physical gold, although I am right now looking to hedge my position because when silver went on this parabolic run, basically from like early 2025 up to here, this was just madness, right? So I actually cashed my silver right around 96 USD. So it was like right here where I actually cashed out my physical silver. and we experienced like a massive drop. But after I cashed that physical silver, I actually moved a portion of that over to gold. So let's say somewhere around here is where I bought a little bit of physical gold, and it equated to essentially it was 30% of my portfolio. Now we've seen this little decline in gold from here to here. It's come the percentage of my portfolio has come down quite a little bit here. So just don't like rush in, right? Like, and as I see this chart go into like a downtrend, what I'm thinking about is like, okay, so I'm slightly underweight gold right now, but we are in a downtrend. I'm not gonna rush, but I definitely am not gonna like try and bottom pick either. And that's how I think about physical gold and silver. That being said, if I was a little bit more of like a technical type of trader, I would definitely be looking at something like this right here and just going, okay, well, right now, yeah, it's clear that we are in a downtrend. So maybe we should take it from like a long-term perspective and then go into, you know, a medium-term perspective and then a short-term perspective, because I think people are going to be, they're going to want to be a little bit more tactical and get in at a really optimal time. So from a long-term perspective, just zooming out on the chart here, and maybe we could even take this in terms of like the candles and just make this a little bit from a smaller or from a short or a longer term kind of field of view, right? So this parabolic run has been pretty dramatic, and you would expect that, you know, you're just going to get a little bit of digestion here. But really what this tells me is like the higher the gold price goes, I actually see this like, people were talking about how Bitcoin is like the higher the price goes, the higher it could go, because a 10% move off of 5,000 is a lot bigger of a move than, you know, a 10% move at 1,800. And that makes a lot of sense. And gold is actually getting to that same kind of point right now, whereas we're pretty high on the gold chart here. And once we, you know, trade sideways for a little bit of period of time here, what could end up happening is once we actually break out of that channel, it's just going to get it's going to go higher very quickly. And that's why I just wouldn't be super concerned about allocating money from like a long-term perspective. Like this chart is well in an uptrend. You could see this like very just continuous rise in the price of gold, and even zooming out a little bit further, like look at it, it's just like a continuous rise. And even if you planted a trend line here, from here to like here, you know, yeah, you could come back and retest. Let's actually change the color of this trend line. We could actually retest, you know, we could come back maybe to where the price of gold was at 2025. And that would just make a lot of sense. And even though, you know, you have this massive correction in gold, it still doesn't really disrupt the general trend, right? Like you have this just upward, obviously parabolic spike in 2025. But even if you dropped, say like 50% or something like that in physical gold, it still doesn't really change the fact that we are very much in an uptrend, and any kind of pullback that we get, I would just see as a buying opportunity, because that uptrend, this white line, is actually still intact. So I wouldn't necessarily, from a long-term perspective, I wouldn't really care about the price. Like if it dropped 20, 25%, 50%, great. That would be awesome. That would be perfect for somebody who is not allocated to physical gold whatsoever. So that's my kind of long-term outlook on gold. Like I predict, you know, just steady rises in price. We had a parabolic kind of spike in 2025, and we're going to digest. And I bet, you know, as we get, you know, we're looking more into like the medium term now. This is kind of what I'm predicting that is going to happen. So let's go back to the daily candles. And let's look at gold from a medium term perspective. So from like, we're talking like, we just went from like a time period of like, say 5 to 10 years. Now we're talking like in the next couple months. Where do I see gold going in the next couple months? Well, it's clear that, you know, we are in this channel, this downward channel. And I could actually see how gold might, you know, just come back and retest the bottom of this channel. This would actually break this is like the 200-day moving average. So we're getting a little bit more technical right here. But in the next couple months, what I could see happening is gold coming down to about 40.73 in the very short term. And then I would see some sideways chop from there. What would be great about seeing gold at about let's just call it 4,000, or even like using this trend line, support line right here, 39.28. If we get down here, this is going to be fantastic over the long term, because what we've essentially would do is flush out all the froth that we kind of picked up during 2025. You know, during these like parabolic spikes in any asset class, this is like, it's dangerous. It's not healthy to just be like absolutely flying on like an asset class. I remember when silver was going up, people were talking like $700 silver by like the summer. And that's not the projections that you want to see for an asset that you're holding, especially when it was only at like $100 or something like that. I don't want people to be saying, you know, oh, gold's gonna like 10x. Like that's like a red flag for me, right? So once we get closer to 4,000 on the price of physical gold, and we're talking USD, by the way here, then we're going to have flushed out pretty much anybody who was just buying during this parabolic spike. They're going to be sellers and they'll be gone. And then once that kind of happens, once we kind of retrace down to maybe around $4,000, are we going to, you know, bounce high and break upward out of this channel? Like, let me actually put a drawing on here of what could potentially happen over the next little while. Like, so once we tap that 4,000, all those people who bought around here, they're going to be sellers. And then what we could experience is like a pretty steep bounce off of that support line there. And maybe it's not like a straight shot up and out. Like we're probably going to have some sideways chop here. So in the medium term, over the next couple months here, what could end up happening is you come down, you'd retest this support line, maybe you make one of these, and then you start to trade sideways, maybe upward, and that's when you can actually break out of that trend line. It's not going to be like a straight shot from bottom breakout or anything like that. There's going to be some sideways chop, and that's going to be really exciting. But if I was a more tactical trader, somebody who's really looking to time those gold purchases like very, very well, I would look and wait for a breakout of this channel, and I would look to maybe buy right around here, because then you know, like this like if you're somewhere around here, like you could still kind of go lower. But if you're thinking in like months opposed to years, then I would look for a breakout out of the channel here and then make a purchase. And that's what I'm kind of thinking about right now. But the only reason why I'm thinking about that is because I have an allocation to gold and silver. If I was starting from scratch, what I would not do is go, well, I'm just going to like wait until we get like confirmation that it's going higher. And I'm going to wait for that breakout. I think gold is one of the most important things that you could own over the next 5, maybe 10 years or so. And I'm not going to trade it. I'm not going to see it enter into this channel and go, well, we're in a downtrend. I'm going to sell my physical gold. I don't do it like that. I'm going to hedge my position using some of my allocation that I have to stocks. And that's what we're currently doing in Metal Zone Momentum. This year, this actually this week we picked up a 10% rise in just this small little section here. So there are ways you could hedge your physical gold position. So I think that's a perfect segue to go into maybe the short term. Because I did catch this little fall in gold right here, and I used inverse positions to hedge my position, and I created a whole strategy. Basically, it was a strategy based off of a stalling S&P 500, a lowering, a drop in oil prices, and the gold miners were also like perfectly set up. So I created this whole strategy, whereas if gold fell just a little bit, then I would be able to almost not completely hedge my position, but make a lot of gains in like a very short period of time, and that would hedge my physical gold position. And that's a strategy that I've gone over on Metals and Momentum on the paid tier. So this small little pullback in gold is not that big of a deal for my physical position, but I was able to hedge with my stock allocation, and that's what I've been doing over on Metals and Momentum. So in terms of like the very, very short term, this chart doesn't look the greatest, and I'm just gonna like zoom right in here so we can see what was going on. So one of the reasons why I actually put on a hedge and created this whole strategy is because one, I've been watching the gold chart. I've seen the downtrend that we are in, and then we got this topping tail right here in the price of physical gold, and this signaled that we were about to roll over on gold. So this little candle right here was a huge red flag for me, and I began to put on and implement this strategy where I was going to be able to profit dramatically off of like a small decline in the price of physical metal here. So this was a red flag. I started to get short and inverse a number of different things to hedge my gold position. And once we started to get close to right around here, that top of that topping tail right there, that's when I said, you know what? Let's put on this inverse position, because we could essentially roll over here, and then we'll be able to protect our physical gold holdings by doing so. And it brought in about, it was an 11% gain in one inverse position, and then a 5% gain in another inverse position that I took over there. So we were able to essentially create, on average, let's call it like a 12% gain off of just this small little fall in gold prices. And that's pretty much how I'm playing it right now. But that topping tail was a signal for me to get inverse or short or hedge the position, and that's exactly what I did. In the short term, I actually think we could, in the coming days, probably in like the next week, what I could see happening is you have this trend line right here. And this actually to me was another reason why I said to myself, okay, let's start to hedge that position a little bit. I'm really zooming in on the chart here, but I was basically following this trend line here. I saw the topping tail, and then I said, if we break that, then that's a signal that we're going lower there. And then of course it did. I applied the hedge kind of early just in case, and it was just a perfectly timed hedge and inverse position there, and then it broke. So what I could actually see is when you break a trend line like this, what tends to happen is you come back and try and like retrace it. So you get that break, and then you get a rise upward, coming back and actually retracing up to maybe about here, and then you start to go lower on there. Oops, didn't mean to make that last line there. But one of the things that I will be very excited for, if we do kind of get a little bit of a spike in gold, and this could happen over like, the span of like a couple days. It could happen over a day, but it could happen over the next like week or something like that, where we just get this like kind of big rush upward. I don't know if it's going to go like to here, or if it's going to go up to this kind of top of this channel right here. I don't know if that's going to happen or not, but If we do get that kind of price action, then we can begin to apply that hedge once again. And even if it takes a little bit of time, like look at, you've got like this area of resistance, like this is what you would call like a ceiling. This right here would be called a ceiling. And if you kind of created this kind of upward swing and met the ceiling right here, or the top of the channel right here, then that's where, you know, you could say, okay, let's go inverse and apply that inverse strategy that I put on, and then we could start to hedge that position even further. And what's really interesting is if you just measure from like the top here to here, that's a 4.3% decline just using my inverse strategy that we created over on Metals and Momentum. We could project about a 10% rise, because we know we're roughly about 2x the price action of physical gold based off of what we just hedged right here. So if gold has just like a little bit of like a stall out, and whether or not, we have that immediate pop up, or it takes maybe about like, say like 2-3 weeks, and then comes back up to here. Either way, there's a little bit of resistance here. And on top of that, like we'd be still abiding by that topping tail. And then I would say, we need to apply some hedges right around here. And that's kind of my short-term outlook for gold. And then once we kind of touch this resistance point, are we going to break out from here? And that's why I said, like, in the long term, it doesn't really matter, because like, we could break out here and like you'd be like scrambling, right? Whereas like if you're just a longer term investor, whether you buy here or like in a week, or like even if in a month, like, gold's at say $4,000, it almost doesn't really matter to you, right? Like, cause you're positioning yourself for the 5, maybe 10-year period. I just want to maintain some wealth over the next 5 to 10 years. And gold has been a perfect asset for doing that. In fact, the price of gold, if gold is like slamming down to 4,000, then anything else that we buy is probably getting hit pretty decently as well. Like, I don't project the S&P 500 to be flying if the price of gold drops by $2,000. Like, I think that's a silly thing to think about. So you have to kind of decide, are you a long-term investor? I think the people that I'm trying to speak to in this video, they're probably approaching this from a longer term perspective. But I've also been getting asked, do you buy here? Do you buy later on down the road? Well, use this video and determine what type of investor you're going to be, right? Are you going to be holding a position for the next 5 to 10 years? Well, then I don't think it really matters. Like, if it breaks out here in 2 weeks, in 3 months, it doesn't really matter. And like I said, you could just scale into the position. Going back to my slide here, you don't have to allocate $25,000 of your portfolio tomorrow, right? So that's one way I would be thinking about this. And I just wanted to make this video to help those people who are trying to allocate capital to their investments from scratch, right? And I also get questions from, traders who are following along with my swing trade notifications. Well, hopefully this video helps you as well. So this video is getting kind of long in the tooth. We've been going on for about half an hour here. So I just want to let me know if you appreciate this video. And thank you so much to all the people who are over on Substack. It's been an amazing run over the last year or so on Substack. I'm so happy that we're able to actually help some people out. And also, I made the Substack to reach out to family, and more family are actually reaching out. And that's a great thing, because that's the whole goal of Metals and Momentum. It's not really about, helping or it's not really about just making bank for myself, right? Like, it's all about helping the other people that are surrounding me on a daily basis. And now we're expanding Metals and Momentum to other people as well. Of course, we have a subscriber out in Europe. And I'm like, what? That's just crazy, like, to think about. And he's like the nicest guy ever. So I really appreciate everybody who is joining me over on Substack. Like I said, use those links down in the description, and that is where I'm going to leave it. Thanks so much for watching. Maybe if you made it to the end of this video, let me know in the comments down below. Leave me a camera emoji down below. Thanks so much for watching. We'll see you in the next one.